The reason why I'm attempting to show you all this is because the vast majority of people that complain about the price action of XRP are the ones that do not know how to dollar cost average into digital assets properly. Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, I'm going to show you all the importance of understanding fundamentals, how as a day trader or as a dollar cost averager in the digital asset space, you can use this information to your advantage, how we are using the information in the private CYPRX community to our advantage to capitalize on market movements, to build better portfolios. I know that as an XRP investor, seeing XRP holders suffer mentally over the past consecutive couple of years that XRP price has pretty much been stagnant, not reaching new all-time highs when other digital assets have reached new all-time highs, can be very troubling on the mind. However, here at CYPRX, XRP is actually one of my best performing assets. And in today's video breakdown, I'm going to show you why that is. It is because I have learned how to implement the strategy to dollar cost average in properly when prices are discounted, how to gauge when prices are going to be discounted, to then further see an appreciation in my portfolio, even if it's just a couple of percentage points, nothing extravagant or significant, but still seeing a rising equity curve after I plug capital in the market instead of seeing a depreciation in my portfolio. So if that sounds like something you'd be interested in learning, stick around for the entirety of this video breakdown. It's going to be very educational. It's going to be a little bit lengthy. I'm going to try to keep it short, but I want to get my point across. Again, here at CYPRX, we're in an attempt to educate people, to really show individuals that you can build a profitable portfolio. You can become a successful investor. You don't just have to plug capital into XRP and always hope for a $100 price tag. You can actually see gains in the now. So again, if that sounds appetizing and you enjoy these educational video breakdowns, do us a favor, smash that thumbs up button and subscribe. So I want to first take your attention to a post that I put out to you guys just last night, where I gave you all some of the fundamental insights that we pay attention to here in the private CYPRX community, discussing and talking about CPI. The reason why I'm showing you all this, looking at the dates, April 9th, 2024, I put this out to you guys on X Space a couple of hours after I posted it within the private CYPRX community. If you scroll up here, you can see I obviously, of course, put the information out to our private community in advance before social media. They got the news about 5 hours before X did, where just clicking through and reading these fundamentals, we were going over the potential impact that the inflation data today from the US front, i.e. the CPI figures, could have on the overall risk sentiment in the market. Now, fast forward to today, I want to show you all a retail article, right? This is now the day after April 10th, 2024 from Cointelegraph, whom I'm sure if you're a market participant in the digital asset space, you've heard of before. You can see they said Bitcoin price weakens after hot CPI print raises doubt on Fed rate cuts, right? So they're trying to go ahead and explain as to why the digital asset space slightly dropped in value today. Now, with that in mind, this is again why it's so imperative for you all to understand this information and be a part of a community that puts this information out before it happens. You can see now manual retail investors are trying to catch up, figure out why their portfolios are down. Yet here at CYPRX, we were giving this information a whole entire day in advance to our private members so that they can better situate themselves and prepare for the fundamentals that came out today. Okay, so let's just go through this real fast. I want to go over this, and then I want to show you guys some dollar cost average positions that we just recently took, how we were able to capitalize on them, and how we were able to know that the market was going to discount itself. And then just show you guys some clips from our Zoom call, our private meeting yesterday that we had last night during Asia session. So this was the fundamental piece that I wrote to the private community members, going over fundamentals that I put out to you guys publicly on the X space, but gave to the private community members about 5 hours before I gave it out to Twitter, right? So I said, tomorrow, our primary focus lies on a series of significant events unfolding throughout New York session. Before delving into the trajectory of these events, let's first recap recent developments in market conditions. It's crucial to grasp one of the main drivers behind the optimism in risk assets and why this sentiment, particularly in crypto markets, has begun to wane. The decline in inflation readings during 2023 and early 2024 have fueled hopes for a Federal Reserve rate cut this year. Now, this optimism that the Federal Reserve was going to cut rates in early 2024 fostered a risk on market sentiment, bolstering the strength of risk assets while weighing on the strength of the dollar. Initially, market participants anticipated a rate cut in March, but this narrative started to fade as signs of inflationary pressures persisted. In mid March, we saw further support for that rate cut narrative from Fed Jerome Powell, who adopted a dovish tone during the last FOMC meeting that was pretty much in mid March, where he hinted at 3 rate cuts in 2024. However, as March ended and April began, data and narratives from Fed speakers shifted hands, pushing the rate cut expectation even further back. Notably, last week on Monday, we had upbeat ISM manufacturing PMI data on the US front, and midweek we saw Fed Governor Michael Bowman suggesting that the next move might be a rate hike instead of a rate cut, given stubborn inflationary measures. As last week ended, we also saw strong NFP figures and lower unemployment claims. Now, this underscored a resilient US labor market. Upbeat non-farm payroll figures and lower unemployment claims suggest a robust and growing economy. When unemployment numbers exceed expectations and unemployment claims decrease, it indicates that labor markets are tightening and the economy is strengthening. In such a scenario, the Federal Reserve may be less inclined to cut interest rates as there is less of a need for stimulus to spur economic growth and job creation. So, this is one of the key factors as to why, in recent trading days, we've seen a slight pullback in risk assets, particularly in the altcoin space, right? So, just keep that in mind. It's important to understand what fundamental factors are driving risk on, risk off sentiment, remembering and keeping in the back of your mind that 95% of transactions in the digital asset space are still due to speculative day trading. That is yet to change. You guys know that I'm a firm believer that at some point in time in the future, that could all change when we see a utility driven market. But right now, that is not the case. We are operating in a risk asset class. So we need to understand these fundamentals supporting and driving demand or decreasing demand for these risk assets so we can situate ourselves on the right side of the market. So I said, turning our focus to the impending consumer price index data, economists foresee a modest 0.3% uptick in consumer prices for March, a slight decline from February's reading of 0.4%. However, there is an anticipation of the annual inflation rate climbing from 3.2% to 3.4%. Now, in this breakdown, I mentioned to you guys the ideal scenarios that we would want to see a risk on market sentiment, which was lower inflationary readings coupled with dovish remarks from Fed speakers. I gave you guys also the inverse scenario, what would happen and what would take place if we saw a uptick or higher inflationary readings coupled with hawkish comments from Fed speakers. It would most likely lead to a strengthening of the dollar. Now, during the New York session, we saw that exactly take place. Last night in our private community Zoom call, I had warned the students to the absolute T of a degree that if we saw higher inflationary readings, that was most likely going to be the case. Take a second and listen. And we see higher inflationary readings. Couple that with hawkish Fed comments. We failed to break beneath the 104, give or take some liquidity grabs beneath lows, just like to the upside to shake out early price action traders looking for stops to get hit, buy stops or sell stops. As long as we do not break below the 104 to 103.8, we reject that. I'd be looking for the dollar to come in at least correct this previous bearish move, possibly even revisiting the highs here at the 104.8. If we break the 104.8, we're definitely going to be tapping into this high here at the 105.100. In a scenario like this, we would see sells in risk assets across the board, particularly in gold and GBP USD. Also, give or take some slight retracements in the digital asset space. You can see how we see some mixed greens, mixed reds here. Tomorrow, if the data comes out upbeat for the dollar, higher inflation, stronger dollar, this whole entire list that I have here will most likely be red. All right. So dollar out of the way. Now, obviously, of course, I'm Last night in our private community session, as you guys saw, these are the exact same drawings that I had laid out for the private community members, and you can see that analysis playing out to the T. We failed to break below this previous demand range. Dollar held strong above the 104, and we flipped bullish up into the high 104s, breaking above the 105 before starting to cool off on the day. So the analysis that I gave to the private community members was accurate to the T of a degree. Again, showing you the importance of joining a community that gives this information out in advance instead of after the news comes out, where you can see retail traders are now reading articles like this, trying to figure out why their bags are down. Okay. Now, something else that happened today, aside from the hot inflationary readings, is we're still seeing the rate cut narrative hold weight in the market. So yes, today, you can see here via the US data that we did see higher inflationary readings, higher than previous readings, and higher than forecast, where the CPI month over month came out at 0.4%. And the CPI year over year came out with the increase from previous readings at 3.2% up to 3.5%. Now, this obviously, of course, strengthened the dollar. However, midway through the session, we saw some sprinkled Fed speakers. And these Fed speakers, for example, Fed Barkin went on to say that he thinks that we're making a lot of progress on inflation, which can still be viewed to the market as a dovish comment or a comment that fuels the rate cut narrative. Remember, the narrative that has been driving demand in risk assets that at some point in time, due to lower inflationary readings or a decline in inflation, the Federal Reserve is set to cut rates. Well, if Fed speakers are still saying and signaling to the market that they're still making progress on inflation, bringing it down to the Fed's goal of 2%, we're going to see a turnaround in risk assets, and we're still going to see that demand for risk assets as the markets continue to price in potential rate cuts. With that being said, I now want to take your attention how you can use all this information to your advantage. So last night when I gave this information out to you all, I gave you all some key psychological levels to be paying attention to, particularly just looking at XRP. In our private community on our Zoom call last night, here's a video clip of me mentioning the key psychological levels that I'd be looking at for buys on XRP, whether in the form of dollar cost average positions or in the form of intraday trading positions. Take a second and listen. I'm still going to be targeting the high 60-cent threshold on XRP for intraday scalp positions. So for those of you individuals that are trading leverage in this community, as long as we are still above the end of February lows and the beginning of March lows at around 56 to 58 cents, where you can see there's been a massive demand in this area for XRP that has failed to break below in most recent times, every single time that we've retested, I'm going to continue to look for buy scenarios. So just like on our risk baskets, like GBP JPY and GBP USD, scenario number one would be a continuation move from where we currently sit. Slight retracements down for better buys. Here you can see I also update the community members on my personal dollar cost average levels. And this morning on XRP, you can see at 6:25 a.m., I mentioned to the members that XRP was around 59 cents and that this trade idea or this dollar cost average level was active. So if we head over to the charts and we go look at the time in which I sent that analysis out to the community, okay? So keep in mind, I had told the private members the day before when XRP price action was up here in this area that if we saw strengthening in the dollar, a risk-off market mood, we were most likely going to see red across the board in cryptocurrencies or a slight pullback into discounted areas where we could better position ourselves for buys to see a rise in our portfolio once we dollar cost average in or look for day trading positions. So the members already knew in advance up here when price action was at a high intraday that if we saw higher inflationary readings, that was most likely going to weigh on the strength of digital assets. Sure enough, looking at where price action dumped down into, it was around the 59-cent psychological level, maintaining right now, as of time of recording, a bullish hold above 60 cents. In last night's recording, I mentioned to the private community members these were the levels that I'd be looking to implement some capital into XRP or look for intraday buy positions, right? Couple that with the analysis that I gave to them in the form of my dollar cost average levels, letting them know that 59 cents was active at 6:25 a.m. You can see on the charts, measuring down here at 6:25 a.m., price action was roughly around here in this area. With that being said, after implementing capital into XRP, we have now seen about a 3% increase in our portfolio. The reason why I'm attempting to show you all this is because the vast majority of people that complain about the price action of XRP are the ones that do not know how to dollar cost average into digital assets properly. XRP is one of my top performing assets. I've made over $7,000 this year on XRP alone, and that is because I personally know how to dollar cost average into these markets properly. As you all can see, we were able to gauge when price was at a high over here during last night's Zoom call that if we saw higher inflationary readings, that was most likely going to have a negative implication on the digital asset space temporarily, and that we would be looking for further discounted prices. Once those discounted prices were met, being patient, sitting on our hands and waiting, we were able to implement some capital. And now, albeit it's not anything significant in the form of price appreciation, but we're still not sitting here waiting for some massive bull market cycle to see gains in our portfolio. You can make money in a bear market, in a bull market, whether the market is going up or down, if you know how to properly enter and exit the market in which you're operating in. With all of this in mind, now that we see the rate cut narrative still holding weight in the market, our attention shifts towards tomorrow with some further inflationary data with core PPI figures month over month and PPI month over month, coupled with some unemployment claims and some sprinkled Fed speakers for the directional bias of risk assets and strength of the dollar. As always, I hope that this video breakdown was not only educational in the form of showing you guys that we put this information out to you all well in advance before the retail fundamentals that get all the hype do. So that way, hopefully you can tap in and read these pieces that I put out to you guys publicly on X to really educate yourself on inflow and outflow of risk assets. So that way you as well can capitalize on building a profitable portfolio. None of this is financial advice. I'm not telling you guys to go out there and expose yourself to these markets. I'm simply showing you all how XRP has become a top performing asset in my portfolio because we do not chase bullish candlesticks. We do not chase bullish hopium that at some point in time in the near future, in a non-utility driven market, that XRP is going to be $100 to $1,000 per coin. We are taking advantage of these chump change prices when XRP dips, understanding why it dips, what fundamentals cause that dip to happen, and take advantage of discounted prices once the market turns around and flips bullish. As always, many blessings to you guys, trying to bring you guys the realest information and really wake people up as an investor, as a day trader, actually caring about the information that we provide ahead of the curve. No hopium, no bullish moon boy indicators, no magic Fibonacci's, just sound technical analysis, sound fundamental principles, and a very sound psychological and level-headed approach. I'll see you guys in the next video breakdown.